BYD, the company Elon Musk once laughed at, is now the world's top EV maker and even supplies batteries to Tesla. Born from a small battery workshop and even switching to produce masks during COVID, BYD's journey is a masterclass in turning struggle into dominance.
In 1914, automobile legend Henry Ford and inventor Thomas Edison met in New Jersey with a bold idea: build a practical electric car. They even developed prototypes of a battery-powered Ford Model T that could sell for as little as $500 and run 50 to 100 miles per charge. Yet the project stalled. Cheap gasoline and technical setbacks, including a fire at Edison's lab, meant their electric dream never hit the road. Fast forward a century, and a Chinese company named BYD, Build Your Dreams, has fulfilled that dream. BYD began as a tiny battery workshop in the 1990s and bit by bit grew into the world's leading electric vehicle maker. This is the story of BYD, how an impoverished young chemist built a global EV empire, and how BYD turned the long-held electric car dream into reality. Wang Chuanfu, BYD's founder, was born in 1966 to a poor farming family in rural Anhui, China. Tragically, he lost both parents as a teenager and was raised by his older siblings. Despite these hardships, Wang excelled at school. He earned a scholarship to study chemistry at Central South University and went on to obtain a master's degree in battery engineering at a Beijing Research Institute. Armed with technical expertise and big ambitions, Wang moved to Shenzhen in the mid-1990s, a boomtown known as China's new innovation hub, to pursue his dreams. In 1995, at just 29 years old, Wang co-founded a startup with his cousin Liu Shangyang to make rechargeable batteries. They named the company BYD, which at the time didn't stand for anything, Wang admitted, though later it came to embody the motto, "Build your dreams," and jokingly, "Bring your dollars." With $300,000 in seed money from his cousin, Wang set up a small factory and hired a handful of workers to assemble batteries by hand. From the start, BYD's strategy was simple but effective: reverse engineer successful products and make them cheaper. Wang examined battery designs from industry leaders like Sanyo and Sony, then figured out how to produce similar batteries at lower cost. Instead of buying expensive automated machinery like Japanese firms, BYD built much of its equipment in-house and hired a large workforce of inexpensive labor to assemble batteries by hand. This first principles approach, optimizing for China's cost advantages, paid off quickly. By the early 2000s, BYD had become a battery juggernaut. In fact, by 2002, it was the world's leading manufacturer of rechargeable batteries, supplying major tech companies like Motorola, Nokia, Samsung, and Sony Ericsson. The upstart's low-cost, decent-quality batteries undercut Japanese competitors and grabbed 65% of the global nickel-cadmium battery market. Not everything was smooth sailing. Rivals such as Sanyo and Sony sued BYD over alleged battery patent infringements, but those lawsuits were ultimately settled or dismissed without stopping BYD's rise. In 2002, BYD went public on the Hong Kong Stock Exchange, and Wang Chuanfu, the once penniless orphan, earned a spot on the Forbes China Rich list. Little did investors know, however, that Wang's dream extended far beyond phone batteries. Flush with success in batteries, Wang set his sights on an even grander industry: automobiles. In 2003, barely a year after BYD's IPO, he made a controversial move, acquiring a failing state-owned car manufacturer in Xi'an called Qinshan Automotive, also romanized as Qinchuan. BYD bought the defunct factory for a bargain and renamed it BYD Auto, signaling a bold entry into the car business. Shareholders were stunned. Wang had no prior experience making cars. Rumor says he didn't even have a driver's license at the time. Many investors accused him of going off course. Some even pulled their money out in protest. But Wang was unfazed. His vision was clear: integrate BYD's battery know-how into electric vehicles. First, however, BYD Auto needed to prove it could build any kind of car, electric or not. BYD's initial car models were humble. They inherited a small hatchback called the Flyer from the Qinshan acquisition, an unremarkable economy car that sold poorly. Early on, BYD even styled its logo to resemble BMW's Rondell, perhaps hoping some prestige would rub off. It didn't. Chinese consumers weren't fooled by look-alike branding. Realizing a new approach was needed, Wang reverted to his proven playbook: fake it till you make it. In 2005, BYD launched the F3 sedan, a car that looked very familiar to buyers. That's because it was a near clone of the popular Toyota Corolla, down to the body shape and many parts. But crucially, it cost about half the price of a Corolla. Under the hood, BYD used cheap labor and local parts to keep costs low. This strategy worked phenomenally well. By the end of the decade, the F3 sedan had become one of China's best-selling sedans. Essentially a copycat Corolla for a bargain price, BYD turned BYD into a legitimate automaker almost overnight. In 2007, BYD opened a huge new complex in Shenzhen that housed factories, worker dormitories, and research labs, a sign of its growing automotive ambitions. Even as BYD was selling tens of thousands of conventional gasoline cars, Wang never lost sight of the electric car dream. In the late 2000s, BYD began leveraging its battery expertise to develop hybrid and electric models. In 2008, it unveiled the F3DM, China's first plug-in hybrid sedan, and the next year, BYD launched the E6, a pure electric crossover. At the 2008 Detroit Auto Show, BYD proudly displayed its hybrid F6DM to show the world that a Chinese company could innovate in green cars. The reception was lukewarm. Attendees joked that BYD's display car was a patchwork of other brands. Its front half resembled a Corolla and the rear half a Chevrolet, and the fit and finish left much to be desired. BYD's brochures were poorly translated, which didn't help its credibility. Many industry experts were skeptical that this Chinese battery company could compete with established automakers. That same year, Tesla, then a little-known Silicon Valley startup, wowed the world with its high-performance electric roadster, stealing the spotlight in the EV space. BYD's nascent electric cars looked clunky by comparison.
One person who saw potential in BYD was legendary American investor Warren Buffett. In 2008, Buffett's business partner, Charlie Munger, became intrigued by BYD's progress in batteries and cars. Munger was so impressed with Wang Chuanfu that he famously told Buffett, "This guy is a combination of Thomas Edison and Jack Welch. I have never seen anything like it." Coming from Munger, that was the highest praise, comparing Wang to Edison for technical genius and Welch for managerial acumen. At Munger's urging, Buffett's company Berkshire Hathaway arranged a tour of BYD. During the visit, Wang even drank a sample of his own battery's fluid to demonstrate its non-toxicity, eager to prove BYD's technology was safe and advanced. Buffett was convinced. In September 2008, Berkshire Hathaway purchased a 10% stake in BYD for $232 million. This endorsement from one of the world's savviest investors caused a frenzy. BYD's stock price surged, and suddenly the global media took note of BYD. In 2009, Wang Chuanfu became the richest person in China, worth around $5.8 billion, and BYD was hailed as a rising star of the auto industry. Emboldened by Buffett's backing, BYD accelerated its plans. It continued releasing affordable models like the F3 and F6, which gained popularity as no-frills family cars, while simultaneously improving its electric powertrains. By 2010, BYD had sold a small fleet of E6 electric taxis in Shenzhen in China and was experimenting with electric buses. However, growing pains soon emerged. Expanding so quickly and attempting to transition from copying to innovating led to quality control issues. Customer satisfaction with BYD's gasoline cars began to slip in the early 2010s. Meanwhile, China's auto market was becoming fiercely competitive, and BYD's sales stalled. Between 2009 and 2014, BYD's annual car sales plateaued around 400 to 500,000 units per year, barely growing while rivals like Geely and Great Wall Motor surged ahead. Profit margins eroded, and by 2014, BYD actually saw its earnings decline as it poured money into EV research. The turning point for BYD came from two directions: government policy and a renewed focus on quality.
The Chinese government, eager to combat pollution and build a world-leading EV industry, began rolling out generous subsidies and incentives for electric vehicles in the 2010s. BYD, being one of China's few early EV pioneers, benefited immensely from these policies. The government offered consumer rebates worth up to $9,000 on EVs and provided manufacturers grants and tax breaks to boost EV production. Thanks to this support, BYD's electric bus business took off. The company won contracts to supply electric buses to cities like Shenzhen in China and even to Los Angeles and London abroad. In fact, BYD today is the world's largest maker of battery electric buses, with over 50,000 in service globally. These buses not only kept BYD's factories busy during the lean years, but also helped BYD refine its battery technology under real-world, heavy-duty conditions. At the same time, Wang Chuanfu doubled down on improving BYD's product quality. A telling anecdote: around 2012, after hearing Tesla's CEO Elon Musk openly mock BYD's cars, Wang was determined to up his game. Musk had laughed in a 2011 interview when asked about BYD, quipping, "Have you seen their car?" implying BYD's quality was laughable. In response, Wang reportedly bought a Mercedes-Benz S-Class, tore it down in BYD's lab, and tasked his engineers with learning from its design and build quality. He wanted BYD to match the world's best. There was no quick fix. It took years of effort and some deep introspection. BYD even slowed down launches of new gas models during this period, which hurt short-term sales. By 2017, China began phasing out the easy subsidies to force EV makers to compete on innovation rather than government support. BYD hit a financial rut. Its net profits fell sharply 3 years in a row. Wang later called 2019 the darkest moment for the company as BYD struggled to break even. Yet, rather than retreat, he invested heavily in R&D, confident that better technology was the way forward. Wang Chuanfu's background in chemistry turned out to be BYD's secret weapon in its comeback. By 2020, BYD unveiled a breakthrough in battery tech, the Blade battery. This is a slim, elongated lithium iron phosphate battery that can be arranged in packs like books on a shelf, saving space and boosting stability. The Blade battery proved remarkably safe in tests. When pierced with a nail, a brutal test that often causes regular lithium batteries to catch fire, BYD's battery did not smoke or ignite at all. Its surface barely got warm, an impressive feat that virtually eliminated the risk of EV battery fires. The Blade battery also lasts for an estimated 1,000,000 kilometers of driving and contains no costly cobalt or nickel, making it cheaper and more eco-friendly. BYD's engineers had effectively addressed two major EV concerns: safety and cost. The first vehicle to feature this new battery was the BYD Han, a flagship electric luxury sedan launched in mid-2020. The Han wowed critics with its 376-mile range, fast acceleration, and high-tech features, like a rotating touchscreen and sophisticated driver aids. At a price significantly below a Tesla Model S, BYD showed that it could innovate, not just imitate. It also didn't hurt that the car was styled by a renowned former Audi designer whom BYD had hired, giving it a sleek, original look. In short, BYD was shedding its reputation as a copycat and emerging as a technology leader. At the same time, an unexpected global event helped BYD demonstrate its agility. When the COVID-19 pandemic struck in early 2020, car sales plummeted and factories worldwide went idle. Instead of laying off workers during China's lockdowns, BYD swiftly retooled some of its production lines to make masks and hand sanitizer, products suddenly in high demand. In a matter of weeks, BYD became the world's largest mask manufacturer, churning out 5 million masks per day by March 2020. This move kept BYD's workforce employed and even generated profit that helped fund its continued car development. It was a classic Wang Chuanfu maneuver: improvise and turn a crisis into an opportunity. As the pandemic eased and demand for cars rebounded, BYD was ready with an impressive lineup of electric vehicles. It introduced models across the spectrum: the BYD Dolphin hatchback, the midsize Seal sedan, a Model 3 rival, the Tang and Atto 3 SUVs, and even high-end sporty cars under a new brand. Unlike the utilitarian BYD cars of a decade ago, these new models were stylish, packed with the latest tech, and very competitively priced. Perhaps most importantly, they were all either hybrid or pure electric. In 2022, BYD made a landmark decision to stop producing traditional gasoline-only cars altogether, becoming the first major automaker to commit 100% to electric and hybrid vehicles. This bet has paid off massively. BYD's sales, which had hovered around 0.5 million annually for years, exploded to 1.86 million new energy vehicles, EVs plus hybrids, sold in 2022, more than triple the previous year. That momentum continued into 2023, by which time BYD was regularly selling over 200,000 cars per month, a pace rivaling longtime giants like Toyota. BYD's rapid growth has now made it a true global competitor. In fact, by 2023, it was reported that BYD had overtaken Tesla as the world's biggest EV seller. This figure counts plug-in hybrids in addition to full battery EVs. Even so, it underscores BYD's scale. Elon Musk himself is no longer laughing at BYD. In 2023, when an old clip of his dismissive remarks resurfaced, Musk acknowledged that their cars are highly competitive these days. Moreover, Tesla began sourcing some of its battery cells from BYD for its China-made cars, a testament to BYD's battery prowess. Warren Buffett, too, has seen his faith in BYD validated. The company he invested in at $1 a share was trading at roughly 25 times that value by 2023.
Having conquered its home market, BYD now accounts for roughly 40% of all new electric cars sold in China. The company is turning to global expansion. BYD's vehicles are sold in over 60 countries worldwide, including markets in Asia, Europe, the Middle East, Africa, and Latin America. One notable success is Brazil, where BYD's affordable EVs like the Yuan Plus SUV and Dolphin EV have quickly gained popularity among ride-share drivers and commuters. Brazil has become BYD's largest overseas market, accounting for about 20% of its foreign sales. In 2023, BYD struck a deal to take over a shuttered Ford factory in Bahia, Brazil, literally moving into Ford's old plant to build new electric cars. The symbolism is rich, a Chinese EV maker filling the void left by an American auto giant. BYD is investing around $600 million to set up production there, which will create thousands of local jobs and allow its cars to be labeled Made in Brazil. By 2025, the first BYD electric SUVs and sedans are expected to roll off the Bahia assembly line for the South American market. This project hasn't been without drama. Brazilian authorities temporarily halted BYD's work when a contractor was found mistreating Chinese construction workers. BYD pledged to resolve the labor issues, and the factory plans continue. Elsewhere, BYD is making inroads in Europe, albeit cautiously. It has shipped electric buses to London and electric cars to Norway, the Netherlands, and other countries. In 2023, BYD announced plans to build its first European passenger car plant in Hungary. Executives stated an ambitious goal, targeting 10% of global EV market share, excluding the US and Europe in the coming years. BYD is aware of geopolitical headwinds. For example, Chinese cars face tariffs in the US, so BYD has no immediate plans to sell consumer EVs in America. Instead, it focuses U.S. efforts on electric buses and trucks. It already runs an electric bus factory in California. But in regions like Southeast Asia, Australia, and the Middle East, BYD is aggressively expanding dealer networks and even considering local assembly. In 2024, BYD opened new showrooms in Japan, home of Toyota, signaling it's ready to challenge incumbents even on their turf. Technology remains key to BYD's future strategy. The company's vertical integration, making its own batteries, chips, and even electric motors, gives it control over its supply chain that few rivals can match. This proved crucial during recent supply shortages. While others struggled, BYD kept producing. And BYD shows no signs of slowing innovation. In 2025, it unveiled a 1,000-kilowatt fast charging system that can add 400 kilometers, about 250 miles, of range to an EV in just 5 minutes.
essentially as quick as filling a gas tank. BYD plans to install thousands of these flash chargers across China in the coming years. If real-world implementation matches the claims, it could eliminate range anxiety and give BYD a major edge in charging convenience. The company is also investing in next-gen battery chemistries, like sodium-ion batteries, and autonomous driving software, staying competitive on all fronts. From a branding perspective, BYD is working to shed any remaining stigma of being a cheap Chinese copycat. It has hired renowned designers. For instance, the BYD hypercar line is styled by a former Ferrari designer, and partners with international dealerships. Reviews of its latest models in Europe and Asia often praise its build quality and feature-rich value for money. Even Tesla's Elon Musk has gone from laughing at BYD to respecting it as a formidable competitor. And while Tesla still far outranks BYD in market capitalization, BYD's rapid growth and profitability have started to attract global investors and media attention in their own right.